Dean, good afternoon.
Good afternoon, Yuela. How are you doing?
I'm good, Dean. What can you tell us about the Kwacha's performance against major currencies yesterday? And I know the markets are closing in about 2 hours. How has it performed today?
Well, yesterday was a pretty stable trading day for the Kwacha. So we opened at around 18.205 and closed at 18.2. So it was a very narrow trading range. So usually when you have a narrow trading range, the perception is that there's very little trading that happened. But yesterday we actually had good, decent flow on both sides. So we had a continuation of those salary conversions, predominantly from the mining sector. And then on the demand side, we had some demand coming through from the energy and the agricultural sector. So good two-way flow, which is why we closed at 18.2. And then today, because those salary conversions have come to an end, what we're seeing is a little bit of pressure to the top side, currently trading at 18.275. But the thing to remember, obviously, is the fact that that trading range is still between 17.9 to 18.4 on the top side.
All right. How about the Kwacha against the South African rand, for instance, and the GDP?
Against the South African rand at the moment, it's around 1.103. We've mentioned that the trading range for that rand Kwacha band continues to be somewhere between 1.015 on the bottom side to around 1.115 on the top side. But it does feel like we are moving into an upper trading channel somewhere between 1.04 to 1.14. And the reason is that you've seen significant appreciation in the rand, but you haven't seen that follow through with regards to the Kwacha. The rand seems to be a better beneficiary of portfolio flows coming out of the investment world globally, based on the easing of monetary and fiscal policies in the global economic and the global financial system. So the rand has traded to as low as 16.4, but the Kwacha is still trading at around 18.275. So that's why it hasn't followed through.
All right. How is the commodity market at the moment, especially the crude market on the world level?
Globally, I'll speak about Brent crude because that's the one that really matters to us because we are consumers of Brent crude. Currently trading at $43.77. But the interesting thing with Brent crude oil, I don't think a lot of us remember that at the beginning of the year, Brent crude was actually trading just below $70. It actually rose to around $68 based on the fact that we had those geopolitical tensions predominantly between the US and Iran, including the US assassination of Lieutenant General Soleimani. So we had oil rising to $68, and then we had obviously the spread of the coronavirus and the disease pandemic and the impact of that on the consumption of oil. And we had Brent crude going down to as low as $19.33 per barrel. Now, oil has obviously recovered. It's a little bit higher. As I mentioned, trading at $43.77. But with regards to that, if you look at global consumption, it's still 1/3 less than the consumption last year. And that's because you still have a lot of travel restrictions. There's not a lot of airlines crossing continents, for example. So travel limitations and travel restrictions is obviously the transportation sector, and the impact there due to the coronavirus is obviously impacting the oil price.
Dean, before you go, I'm happy that you mentioned the scenarios around crude, Brent crude over the past 7 months. What would you say is the reason why ERB has not reduced, or at least at the time the price was down to less than $20 a barrel? Why didn't ERB at least reduce price of pump prices for fuel locally? I mean, I think there was some talk to say they should reduce, and then the feedback was they were still running odd stock.
Yeah, I mean, that's a very good question. I remember at that point when they were asked about reducing the oil price, what they did say was the fact that they needed to run out that stock, and then probably the new stock that we were going to get was probably going to be, end up affecting a lower fuel pump price. At least for us, which was going to be beneficial, particularly for transportation locally, as well as the inflation level, which has remained elevated. So, I mean, if you look at the oil price in Kwacha now, it's around 16% lower from the last time we actually had that upward fuel price adjustment on the 23rd of December. Yeah. So our importation bill has technically reduced by 16%, and that's currently now in July. If you look at June, for example, oil price in Kwacha was around 20% lower, so that meant our importation bill was 20% cheaper. If you look at the oil price in Kwacha between March and May, it is around 35% to 45% lower, meaning that our oil importation bill was 35% to 45%. Unfortunately for us, what this coronavirus disease pandemic has done for our government coffers has meant that we've had a funding gap shortfall of around 26.9 billion kwacha. So if you look at the ministerial statement for around July, there's a revenue shortfall of around 17.2 billion kwacha. And then obviously because they've had to spend a little bit more to cater to masses that have been affected with this coronavirus pandemic, the government has had to increase its expenditure by an amount of around 9.7 billion. So that means you've had a hit to the coffers of around 26.9 billion. And I think that's the predominant reason why I think those savings that have been made on the importation side with regards to oil are probably not going to be passed on to the consumer because of that huge hole that we have in our government coffers at the moment.
Dean, thank you so much for coming through today. We'll have a chat with you sometime.